The Dow Jones closes 200 points lower in its worst day this month after the Fed reignites inflation worries. Nvidia tops the $1,000 per share mark in extended trading after its first quarter results beat street estimates. Markets in the Asia-Pacific open mixed after a weak handover from Wall Street. The Bank of Korea leaves rates unchanged at 3.5%. The GIFT Nifty is indicating a subdued start for the Indian markets. Oil prices dropped for the third consecutive day following the Fed minutes, with Brent hovering around levels of $82 a barrel. Gold sees some profit booking after hitting record highs as the Fed rate cut bets cool down. A bonanza for the Union government. The Reserve Bank of India announces a record 2.11 lakh crore rupees as surplus dividend for FY24. That's double the government's budgeted dividend and 140% more than the FY23 payout. The central bank also increases the contingency buffer to 6.5% of its balance sheet. And in key earnings today, FMCG major ITC is expected to report a soft fourth quarter with cigarette volume growth expected between 0 to 1%. From the broader markets, Interglobe Aviation, Shilpa Medicare, Page Industries are some reporting their results today. Good morning, everyone. You're watching Power Breakfast on CNBC TV 18 this Thursday morning. In the Mumbai News Center, I'm Hormuz Fatakia. Let's first take a look at how the Asian markets have opened, and it's a mixed start, as has been the case for most of this week across the Asia-Pacific. The Japanese indices are trading higher, but the same can't be said about the Hang Seng. That is underperforming by a big margin there, down 1.5% as we speak. It's among the worst performers in Asia today. The Taiwanese index is flat. The Korean indices are also trading above the flat line, but the Japanese indices are the ones that are outperforming. The Bank of Korea, the major macro data that came out from there, they have left interest rates unchanged at 3.5%. But the Japanese indices, as I said, are outperforming, and that is courtesy the tech stocks. And those will be in focus on Wall Street today as well. But speaking of Wednesday's trading session in Wall Street, the benchmark indices there ended lower following the release of the Fed minutes. The Dow Jones fell over 200 points, marking its worst day this month. The S&P 500 slipped 14 points, while the Nasdaq Composite settled with losses of close to 30 points. In some earnings reactions, shares of Target fell over 8% after reporting a weaker than expected set of first quarter results, led by weaker spending trends in discretionary categories. The retailer's troubles raised concerns about consumer spending at large. Now, minutes from the U.S. Federal Reserve's April 30th to May 1st policy meeting indicates that Fed officials grew more concerned about the lack of progress in inflation towards their 2% target. The minutes also showed that various participants mentioned a willingness to tighten policy if risks materialize in a way that action becomes appropriate. CNBC's Steve Leisman gets us the highlights from the Fed minutes.
I understand these were minutes from after 3 months of lousy inflation data and before a month of somewhat better inflation data. So they may be a little bit outdatedly hawkish, but I will tell you what these headlines are. The Fed discussed keeping rates higher for longer if inflation did not move sustainably towards the Fed's 2% target. They continue to expect, however, that inflation would, in the medium term, edge down towards that target. Recent data at the time suggested the disinflation process would take longer than they had previously expected, and the readings did not increase the confidence for cutting interest rates. Though the funds rate was seen as restrictive overall, many were sort of uncertain about how restrictive the funds rate actually was. They discussed the possibility that the neutral rate may be higher and that higher rates may be less effective at slowing the economy than they had been in the past. They saw the lack of further progress on inflation significantly increasing both goods and service prices across the board. Now, there was a debate. Some saw it as residual seasonality, an issue we've discussed a lot here. Others saw the increases as broad-based. Now, there was also somewhat of a dovish discussion there where they said the easing of the labor market would be seen reducing inflation in the coming months. And they did discuss cutting rates if the labor market weakened unexpectedly. Productivity increases could have been helpful on inflation, and a number saw consumption growth slowing and household finances weakening. But once again, guys, this was after 3 lousy inflation readings before the most recent April one that was somewhat more helpful and some other easing of demand. But you could see sort of how they were processing this, sort of doubting whether or not they were restrictive enough, talking about higher for longer. I still think they're there, but with a little of the, what would you say, just a little bit of the boil coming off right there.
Steve Leisman there with the highlights of the Fed minutes. Let's now also listen into some important opinion coming in from Stephanie Roth on what she made of the Fed minutes and what she makes of the Fed's rate path going forward. Listen in.
I mean, it makes sense given they're looking for 0.2% month on month in core PCE. That's kind of the threshold that they would make them feel comfortable cutting rates. We haven't been there. That said, the April data were encouraging, so it makes sense for them to watch for the next couple of prints. Our base case is that the next couple of data releases will show core PCE running fairly close to that 0.2%, in which case they can be cutting by September. But they're committed to a 2% inflation target. Something 3% or above is just not acceptable, and they have to maintain their credibility. The good news is we're starting to get some better data from an inflation perspective, and there's starting to be some signs that economic data are softening a bit, such that they can feel comfortable cutting rates, and Waller talked about that yesterday.
And onto some big overnight earnings update. Nasdaq futures now have climbed after AI favorite Nvidia reported strong first quarter results. The company's first quarter revenue rose 268%, while profits surged over 620% on a year-on-year basis. The company has also announced a 10:1 stock split. Nvidia has guided for revenue of $28 billion in the second quarter. That is higher than the expectations of $26.5 billion. The stock also crossed the $1,000 mark after a 6% gain in extended trading. So very positive earnings there from Nvidia. Now let's get to the final update in our global market wrap this morning. European equities fell across the board on Wednesday, with the French CAC declining nearly 50 points and the German DAX also falling by a similar quantum, and the British FTSE also closing with losses of over 45 points. The automakers were the biggest drags to the stock 600 to a one-week low following reports about a possible Chinese tariffs on imported cars. Inflation in the UK rose by 2.3% in April, the lowest since July of 2021. However, this was higher than the forecast of a 2.1% drop. Now that's all we have on the global market action, but how will all of these overnight cues impact our Indian markets? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, Sudarshan gets you the trade setup for the morning. Sudarshan, good morning. What are the cues that you are picking up?
Morning, Hormaz. So today it's all about RBI's dividend bonanza that yesterday it was announced. So what has RBI done? It has announced a record dividend of more than rupees 2 lakh crore, that is exactly rupees 2.11 lakh crore for the government for the fiscal FY24. And it's 142% higher versus FY23 and 107% higher against what government had estimated in its budget for this fiscal. And after this, as per analysts, it's going to act as one of the tailwinds for government finances and help government meet its fiscal consolidation path. And this has led to, this high dividend has led to a sharp drop in India 10-year bond yield, which has slipped below 7% for the first time since June 2023. So it will not only impact bond market, but it will have an impact on equities too. So this is what we are expecting in today's session. But what exactly happened yesterday? We continue to trade in a range bound, and the one index which continues to underperform, that is financials. We saw Nifty Bank closing in the red, with SBI and ICICI Bank being top laggards. At Nifty level, we closed in the green. Even mid-cap index hit record high, and even some PSUs like Coal India and other oil marketing names saw buying, and this has led to Nifty CPSE closing the green of almost 1%. What happened on global front? We saw a close in the red for cash market, but US futures are trending higher, and because of Nvidia has crossed $1,000 per share after reporting its earnings and stock split. And factoring all this, GIFT Nifty today is indicating a subdued start. Lastly, in the cues to watch, US initial jobless claims are there, and on the earnings front, we have earnings of Indigo and ITC.
Thanks a lot, Sudarshan, for all of these cues. And indeed, it was a bonanza there from the Reserve Bank of India that will definitely have a bearing on our markets. Now over to Vamakshi, who would list out the stocks that you need to watch out for in today's session. Vamakshi, good morning.
Well, good morning, Hormaz. Let me first start off with a good set of numbers. Jubilant Foodworks is the counter that I'll be talking about. Revenue, EBITDA margin as well as profit have come in much higher than what we were expecting. Revenue sees an uptick of 24%. The margins have improved by around 10 basis points, and the net profit has come in significantly higher at 207 odd crores, driven by an exceptional gain of 170 crores. Ramco Cements also reported a good set. Top line was higher, aided by higher volumes, which helped EBITDA, but the margins were a miss. Margins were under under pressure due to weak prices in all markets. Net debt reduced by 100 crores and capex cut will be taken positively by the street. Nykaa will be another counter that we will be focusing on. Revenue is seeing an uptick of 28%, margins have improved by 20 basis points, and net profit has surged up by almost 3 times, coming in at 9 crores. Grasim's also reported its numbers. Revenue was up nearly 12.7%. The margins have seen a substantial improvement to 15.3%, and the net profit has come in nearly 15.5% higher. A stellar set of numbers coming from GRSE as well. Revenue from operations sees an uptick of almost 69%. The margins have improved substantially to 8.9%, and the net profit has come in nearly 103% higher. Apart from that, when we look at some weak numbers, Gland Pharma reported numbers that were weaker than estimates. However, strong jump of 96% year-on-year in revenue was seen. Profit was also up nearly 102%, and this was mainly on account of a low base as well as Sensex acquisition. HEG reported a revenue degrowth of almost 11.3%. Margins have contracted substantially. Net profit is also down 67%. Petronet also reported a weak set of numbers. Keep an eye out on Adani Energy Solutions. They will be considering a fundraising plan via QIP on May 27th. And lastly, keep an eye out on Keystone Realtors. A QIP has been launched. The base size of the deal is around 800 crores, and this can be scaled up to around 1,000 crores.
Plenty of stocks to watch out for. Vamakshi, thanks a lot for all of those updates. And lastly, Nigel is joining in with cues from the F&O space. Nigel, good morning. You're spot on yesterday with the Nifty Bank. It's the Nifty weekly expiry today. What's the setup looking like?
Well, it feels good, right, Hormuz, to get the level right. Yesterday, we pointed out the 50 DMA becomes very, very crucial. And yesterday, the Nifty, well, it clawed its way back to around that 50 DMA. So that was a good call that we made yesterday. What about the Nifty Bank? It had about a short covering yesterday because it recovered from the low point of the day, and you had some shots that did get covered out. And that graphical chart that comes up for you on the screen, that tells you the picture. We ended closer to around the 50 DMA becomes very, very important. What happened in terms of the FI data? Well, they unbound some long positions, and they added some shots as well in yesterday's trading session. And that's why, in fact, if you look at it, the total short positioning, in fact, has moved up a little bit because of unwinding of longs and short positioning. That's on a day-to-day basis, it's moved up a little bit. What else are we looking at? Well, the Nifty options data, that should come up for you on the screen, and both the strikes are up for you on the screen. They expire today, so that's why we're bringing that to your attention. 22,650 call, fair bit of open interest build up. 22,500 put as well, fair bit of open interest build up out there. So just plugging in the numbers, the broad range you're getting is around 22,500 to around 22,700, and that's for the day itself. And that's the broad band that traders are positioned for. If we can break either of those levels, then we'll see a swift move in either which directions. On the lower side, the 20 and the 50 DMA become important on the downside. The Nifty Bank, that as well very, very important. Yesterday's low becomes crucial, and the 100 DMA becomes crucial. So the bulls will want to defend that mark. For the time being, it's hovering around that 50 DMA. The bulls will want to take the Nifty Bank gradually to around the 20 DMA. For the time being, though, those are the crucial levels that you should be tracking. Back to you.
Important levels to watch. Thanks a lot, Nigel, for the F&O setup this morning. Time for a short break now. Up next, RBI has announced a record 2.11 lakh crore rupees as surplus dividend for FY24. More on that when we return on the other side. Back with us on Power Breakfast. Now, the Reserve Bank of India has announced a record annual dividend of 2.11 lakh crore rupees for the government. This is a bonanza for the government, which had budgeted for just over 1 lakh crore rupees, and the payout is double of that amount. Now, this dividend is nearly 3 times higher than the 87,000 crore rupee payout in FY23. Ritu Singh is here with more details. Ritu.
Massive dividend payout of 2,10,874 crores from the Reserve Bank of India to the central government for FY24, a record high transfer and 142% more than the FY23 surplus transfer of 87,416 crore rupees. Now, economists were expecting a dividend transfer of 1 lakh crores or thereabouts, but this figure far surpasses that. This is likely on the back of expected higher interest income from foreign securities or bond holders holdings. Now, there was an expected sharp rise in interest earned by RBI through its foreign exchange assets, and that in turn can be attributed to the rate hikes undertaken by the US Federal Reserve in the last 2 years. We have to wait for the RBI annual report for more details, but clearly RBI's earnings from foreign assets would have contributed to this kind of a surplus. Now, there will likely be some revaluation gains in forex reserves as well, unlike what we saw in 2022. Now, importantly, this record high surplus is coming along with an increase in RBI's contingency risk buffer to 6.5% for the year to support growth and overall economic activity at the upper limit of the 5.5% to 6.5% range. Now, keep in mind the government had budgeted 1.02 lakh crores as dividend from the RBI plus the state-owned lenders for FY25. So this 2.1 lakh crore surplus is a huge windfall gain. The bumper dividend from RBI is going to support the government's liquidity and expenditure going forward, although the expenditure from the government itself is only expected to pick up after elections.
Ritu, thanks a lot for that. Now, in a conversation with CNBC TV 18, Finance Secretary TV Somanathan comments that the Reserve Bank of India's dividend will prove to be beneficial for the government and will pragmatically take future steps with regards to fiscal policy.
Cash is a short-term thing. The revenue is important. Cash will fluctuate based on expectations. Cash is not something which can be managed, or I can't tell you how cash will be managed. But I can tell you that this dividend is good for the revenue of the government. It's good for the fiscal position of the government. It's always good. All revenue is welcome.
It's time for a short break now. Up next, we get you cues from the commodities market. Stay tuned. We'll be right back. Welcome back. As promised, Manisha Gupta is now joining in with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Harma's morning, and thank you for that. Well, some profit taking is finally back into commodities. I mean, after a big long haul for the month of April and most of May as well, we are finally looking at some correction coming in for prices. So the crude oil prices have seen a decline on surprise rise in the U.S. inventories. There also are Middle East uncertainties which continue to support. But with even that, the street will watch out for the OPEC and allies meeting on 1st of June. But the major chunk of profit taking clearly has come in for the metals, precious metals as well as industrial metals. So gold and silver prices saw a decline anywhere between 2 to 3% in the overnight market. This is after the U.S. Fed minutes suggesting that there is not enough push for rate cuts given the current inflation backdrop. And that's exactly the reason you saw correction come in for the base metal prices also. So whether it's about copper, which fell 4.5% overnight, aluminum prices were down by 2.5%, zinc, lead, nickel, almost all the non-ferrous metals have seen a decline coming in. The street will now watch out on whether or not there is buying opportunity at these levels. If not, then we are headed for a longer correction.
Tells you the kind of market we have been in, that profit booking comes as a sigh of relief. But Manisha, thanks a lot for joining in. Now, moving on, AI giant Nvidia reported strong first quarter earnings leading to a rise in Nasdaq futures, and the stock also crossed the $1,000 mark during extended trading. Sudarshan is back with us to tell us more. Sudarshan.
So the record run for Nvidia has continued as company has reported earnings which are much better than expectations and significantly higher year on year. And in process, its market capitalization has hit record high and has become world's third largest company in with market capitalization. And in the last 1 year, its market cap has surged more than 4 times. That in 2023, its market capitalization was $500 billion, and currently it's more than 2.3 trillion. Talking about the earnings of Q1, revenue has more than tripled to $26 billion, and it's higher than company's outlook of $24 billion. And this was driven by its data center business, which is up more than 400% year on year. And its major data center clients, which form more than 40% of its revenue, are Amazon Web Services, Microsoft Azure, Google Cloud, and Oracle Cloud. Talking about the Q2 guidance, company expects revenue to be more than $28 billion, gross margin expected to be around 75%, and company says it can scale models by 1 million times in coming year. So overall, very positive earnings and strong guidance for Q2 as well.
Outstanding results there from Nvidia. Thanks a lot, Sudarshan, for that update. Now, moving on, the Corporate Affairs Ministry fined LinkedIn India and Microsoft CEO Satya Nadella, along with Ryan Loslansky and 7 others, with a penalty of 27.1 lakh for violating significant beneficial owner norms under the Companies Act. The penalties were detailed in a 63-page order by the Registrar of Companies. On to some other news we are tracking this morning. The pound sterling builds on gains and is holding firm after Prime Minister Rishi Sunak called an early election on the 4th of July, saying that it is time for Britain to choose its future course. Rishi Sunak is taking a big gamble because his Conservative Party, the Tories, are trailing the opposition Labour Party by 20 points. Recent opinion polls show that he would need to defy political gravity to lead the Tories to a 5th successive general election win. But the Prime Minister is hoping that the recent upbeat economic news, including the fall in inflation, will up his chances.
Over the next few weeks, I will fight for every vote. I will earn your trust, and I will prove to you that only a Conservative government led by me will not put our hard-earned economic stability at risk.
Rishi Sunak there calling for elections on the 4th of July. Let's pull up the Asian markets as well, and the Hang Seng continues to be the lead laggard. Now has extended its losses. When we started the show, it was down over 1.5%. Now it's extended its losses down 2% now, almost 400 points lower on the Hang Seng, and that has been the trend all through the week. Most of the Japanese indices have done very well, but the Hang Seng has been an underperformer across the Asia Pacific, so that has been a pain point. The Taiwanese index continues to remain flat. The Japanese indices have done well as well. The Nikkei is up close to 0.7%, so that is good going there in Japan as well. But the Hang Seng remains a pain point. Pull up the GIFT Nifty as well. That was indicating a subdued start for our own markets, and it stays that way, a 12-point downtick at the start of trade. Some important levels that Nigel highlighted this morning as well. Those will be the ones to track for the Nifty, as it is its weekly expiry as well. But with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call takes the action forward.